Hey there, amazing traders. Hey there, amazing Forex Mastery students. So this is basically just an update of how to plot your key levels. So this is like part 2, if you want to call it. This is actually an update of the course. You have to understand that obviously when I made the program, we just decided to put a couple of videos on there, and the plan was always to update the course and make it even better as time went on. So this is kind of like part 2 of how to go about plotting your key levels. Okay, how to go about plotting your key levels, part 2. In this particular module, I'm going to be citing more examples. That's exactly what I'm going to be doing here, so that you guys have a better understanding as to how to go about plotting your key levels. Okay, so like I said in the previous videos, levels are not just lines. Okay, most people end up drawing, just end up having so many lines on their charts that look like this, and it's just an absolute mess. You just have lines everywhere, and most people don't know how to plot these levels. So it just makes them either confused, or as you can see, because of this line, I don't even know where to put this level. If I was to put another one, I will obviously have to come and put this one about here. So you end up finding that you have 3 levels here. And then if I was to put another one would probably come here. And if I was to put another one would probably come here. And then if I was to put another one would come here. And this just looks like an absolute mess. You cannot really trade around these kind of levels. They're only going to give you false readings, and half the time most of them are wrong. Okay, so this is just obviously just need to make sure this is recording. Yeah, it's recording. Okay, this is just obviously make sure that you guys understand the difference as to why I don't like to use lines for my levels. That's number 1. Number 2, the reason why I like to use zones as my levels are because zones are able to map out. A typical example is this, right? If you notice, we had to use one line here, another line here, and I think another line at the bottom. But with a zone, I can simply just map it out like so. And instead of having 3 levels, I have one zone that touches multiple levels. Okay, so just adjust this pretty nicely like here. But if I had to do a line will have to come here. But this is a zone, like it maps, it touches. The essence, guys, is so that I like to put them on the body of the candle so that it touches enough points in the market. So if I extend this back as well, you would see that it also goes all the way back historically. Yeah, so if I had to put a line, I'll probably have to put a line somewhere here. But you notice that the line touches here, but it doesn't really accommodate these guys at the back here. And if I obviously take this up a little bit, then this level is not exactly accommodated for what exactly is. This is not exactly a key level. You just end up plotting levels that are not exactly strong enough. Okay, what makes a level strong, what makes a level very strong, is how many times it touched, it was able to bounce off of that region historically, right? As you can see, historically this market bounced off here. Yeah, bounced up once, 2, 3, although you tried to breach it, but however it came back down, 4, 5, and then 6 in the future. So this represents what a key level, right? So this is exactly how you go about plotting your key levels. I'm just obviously going to clone. So what I do here is I clone. I don't draw another one. I just right click and then I clone. So what I like to do is just delete everything. What I like to do is when I'm mapping out my key levels, I like to look at the current market situation, right? So another question is, where do I plot my key levels? To be honest, I like to plot them on my monthly time frame and then adjust them as I go to lower time frames, and I'll explain that to you shortly. Because on the monthly time frame, it's easier for me to see things properly. So for instance, I can see that this level right about here is a key level. Okay, why? So what I would do, what I'll always do first of all, is I will identify the most significant turning points in the market first, and then I will clone. I will put at the top here, this is a very significant turning point, and then I'll work my way out from here. I remember when we sold somewhere around here and were bearish, we knew the market was going to drop like 1,000 pips. Why? Because when we looked to the left, actually the key level was here. I like to put them on the body of the candle. Okay, and when we looked to the left, we could see that the next level target was somewhere about here. Actually, I drew this down a little bit lower because on AUD USD is an exception. AUD USD loves to respect, actually was here. AUD USD loves to respect round numbers. Okay, so I instead of putting it here, I just dragged it all the way back down this way. Sorry guys, saw the message coming, so I had to take my WhatsApp out. So I mean, that's pretty much it. And then if I look to the upside, I mean, as you can tell, AUD USD is racing all the way to the upside here. And even this level at the top, if I extend it to the left hand side, you can see very well that we have touched so many significant points in the market. Okay, it needs to cut across. If I had one line, the line I'll probably only be able to maybe be here or be here, but this one I'm able to accommodate as many points of the reversal as I can. This here, touched here so many times, touched here, kind of like touched here. This it didn't respect it here. Obviously this was 2008 crash, respected it here, respected it twice here. So guys, trust me, it is going to come back here and it will respect this level. Okay, so let's see where our next level is going to be. So if I clone this, I'm gonna try and locate another key level. So guys, what you want to do is you want to try and spot the most obvious ones first. Okay, delete everything here. I want to spot the most obvious levels. Don't forget, this is current price action that's happening in front of us right about here. So what I want to do is I want to try and spot the most obvious ones. So this is one of the most obvious ones. The two most important turning points in the market are these ones. So I want to plot these two right about here, and then I want to look for one that is very obvious. Okay, I think I feel like this one is quite obvious. So if I put it here, look, it accommodates here, and here, but I feel like here was also a very significant turning point in the game. So I would try as much as possible to bring it a little bit lower to at least touch the tip of here. So now it touches here, and here. But if it was a bit too high, it only accommodates these guys. What about this two here? So I will try as much as possible to centralize it a little bit. If it doesn't touch enough, I'll make it slightly thicker, slightly, not too much, just a little bit thicker. I think now you can clearly say that this level is a strong level because what it accommodated. Let me look at the historically, the price has never been there before 94. So you can tell that here, you know, this is pretty much, this is a strong guy right about here. And then once we break here, I want to look for another most very obvious level, which I feel is going to be here, or here. So in this case, I'm going to choose somewhere in the middle, like so. Yes. Now, why did I do this? Why didn't I put my level all the way to the top here? Now, the reason I didn't do this is because it only accommodates this guy. But if I bring it lower, it accommodates this guy and this guy. But this was a major turning point, and this was a major consolidating point in the market. I cannot overlook that. So what I'll do is I will just bring it in such a way whereby it touches here, and the wicks of this candle. This looks a lot better. All I need to do now is drag this into the future, extend this, make sure you don't move it too much up and down, extend it into the future, because at the end of the day we want it in the future, not in the past. Okay, just push this forward, just make sure we're putting it properly, and there you go, easy as ABC. Now you're also going to see situations whereby you have a certain level, or you might come across, so don't forget guys, this extends all the way back here. So you might also see situations like this. So this is a monthly time frame. So situations like turning points like this one and this one, where obviously there seem to be some kind of fracas inside of here, right? So between here and here. So now and only now will I now say, okay, since I can't exactly, this doesn't really look like. Look at the blue levels. Like, these guys went back historically. These are some big boys. You get what I mean? These are some big boy candles. These are some big boy levels, right? It touched, like for instance, this one touched 1, 2, 3, 4, 5, 6, 7. Had issues here. Even came back to test here 8 before he rallied up. This is a concrete guy, right? But somewhere in the middle here, there isn't really anything sustainable, right? There isn't really any level that I can say, yes, my blue levels have to be worthy. They have to be worthy of being brought out. So if the blue levels, I refer to my blue levels as the national grid, right? Remember, for those of you guys who live in developing countries, you have your national grid, and you have the national grids are power lines. For those of you who are in the US, you have power lines that run interstate from like California to, just different parts of the country, right? So I consider these the major power lines, and then I can always come and bring, now this is where I use my thin levels. I can bring my thin levels because I feel like this level right about here might pose a problem, okay? Just because it's not a major level doesn't mean that, because the market turned around here, it touched it here, and a couple of times. So I'm going to use this thin line to obviously highlight this level here. And there you go. You can see how clean my chart looks. Looks very nice and clean. I can already tell you that AUD USD is heading here. If we break this level, when we come here, we're definitely going to have some rejection here. If we break here, we're coming here, and if we break here, we're coming all the way here. It's as easy as ABC. And at the bottom, if AUD USD eventually decides to reverse, you have one level here, and if you look left, all you need to do, guys, is look left. If I look left, next level target is all the way down here. Because it's AUD USD, I'll leave it at a round number, right? And there you go, easy as ABC. So I wanted to obviously use this opportunity to break down the key levels, and then this is a monthly time frame. If I go on the weekly time frame, you can see how it's a lot cleaner and a lot easier for me to trade. If I come on the daily time frame, so sometimes on the weekly time frame, I usually come to kind of like adjust the levels properly if they are too big, if they are too thick. But I think I did a good job here. These levels don't look too big. They're very clear, very straightforward. You can tell that AUD USD in the event that we indeed do. Give me a sec, guys. I'm just spotting something. Right, that's why that bounced off there. Cool. So in the event that we do continue in this upward trajectory, we're going to come here. As a matter of fact, as the time I'm recording this video, I'm long AUD USD somewhere around here. First level targets are at the top here, and overall targets are all the way at the top here. And then obviously, that daily time frames are for entries. I'm just going to quickly do a little something here. Just quickly draw your trend lines, and you can see how the market has nicely bounced off here. Guys, I want to tell you guys another trick. The third touch of the trend line always does the trick. What does that mean? When the market, when you see a trend, when you draw your trend line, you connect the first point to the second point, and then you let it slide. When the market comes to touch it for the third time, that third bounce is always one of the most powerful bounces. It is usually the bounce that actually propels the market the furthest from experience. So that's why I came up with the saying that the third touch always does what? The trick, right? And obviously I'm bullish. I bought this market at this bullish engulfing candle closing on the daily time frame. My first level targets for this are here. I think is approaching the mark. The mark is approaching that mark somewhere about here. Goodness, where is my thing? Which is here. I'm just going to zoom in pretty nicely. So yeah, if we break above here, so first level target, I'll be taking out 50% of my position here, moving stop losses past break even. If we break here, ladies and gentlemen, as you can see, this level is next level target. However, on the daily time frame, you can see how big this thing is. So sometimes I shall zoom out and kind of like try and refine it a little bit more to make it a bit smaller. Okay, just a little bit smaller so that it doesn't take too much space, whereby I can't really see what the candles are doing inside of the level, right? So as you can see, very clean, straightforward and easy. So I'm not going to waste too much time on AUD USD. Let's go and take on some more examples. So let's go over to the euro dollar. I have deleted everything on my chart before I started. Obviously I had my analysis all done. So euro dollar, I'm just going to zoom out. Always come and start from the monthly time frame. It's simple and straightforward. Now I need to plot key levels in this market, right? What am I going to do? How exactly am I going to go about it? It's very simple and straightforward. Always look out for the most obvious ones first. This one is one of the most obvious ones, this bottom here. This my thing is misbehaving. Do not annoy me, please. Okay, the most obvious ones first. Plotted. I will extend it back just to see. As you can see, you know, pretty nicely done. Extend this, put this here. I will clone this and look for another very obvious turning point in the market, which was here. As you can see, this market tried to break here several times. However, I wasn't able to do that. As you can see, I'm going to move this up slightly higher. Why? Because of this guy somewhere around here. Because of these guys, I needed to touch properly this week. Now look, if it was now look, when we broke above here, look, we came to test here. See how magical this thing is. Just look left. Look for the most obvious points in the market, plot them, and look left, and make sure you make sure that the closest point to the level touch the zone. That's pretty much it. So I have two key levels plotted out. Euro dollar is a bit tricky, but you know, that being said, doesn't really matter. We will go ahead and plot our levels, and then now we can now try to see maybe where this level can be. Now I know, before I draw this, I know there was some form of rejection. So every time we came here, we flew up. Every time we came here, we flew up. Every time we came here, we flew up. If I was to plot lines, I would have one line. I would have one line. I would have two lines, and I'll have three lines. Ridiculous. Now watch me replace all these three lines with one level. Okay, I'll show you guys. Now I would now look for, first of all, this is a major turning point, right? The reason why this market turned around was because of this. There was some form of buying pressure around this. People call it supply and demand. It's all bullshit. So there was some form. There was a level here that was causing the pressure. So what I'll just draw my level across, right? And I'll just try and see, you know, plot it. So first of all, my benchmark will be here, and I'll just try and plot it to see exactly. So you can see that this level that I have drawn, you know, has accommodated here, turn around here, turn around here, turn around here, turn around. So we've accommodated this one. This guy broke down below here, but that's fine. Look what happened when we broke down below. We came back and closed above, and this one. So if there are 3, 1, 2, 3, I will try and use my level to accommodate at least 2 of the 3. Right? So I've accommodated this one and this one, and this one came. This one came below here a lot. However, it can pass for a false breakout. So the idea is not to try and catch every turning point when you're plotting your levels, is to find a common ground amongst the turning points in the middle and try and make your level thick enough to accommodate. I'll take that again. The essence is not to try and put a level on every single turning point. The essence of plotting this, or rather the trick behind plotting this, is to find a major turning point and look for a common ground amongst all of them and plot it in between, like so, and then try and make your thing thick enough to accommodate as much as you can. Don't go out, like for instance, I'm not going to make this big just because I want to. Never. I will make this thin. Okay, I'll make this thin like so, and you can tell this is accommodated, this is accommodated, this is, although it blew past it a little bit, but this is accommodated, this is accommodated, this is, even this you can even say it was a false breakout, and this has been nicely accommodated, right? So maybe I can just, I think the level about here is fine. Now the euro is on its way into that level. You can now see, oh, before I get there, we have some more levels to the upside. Let's see how we can go about plotting. Clone this. Just by looking at it, I can tell that this was a key level right about here. I wish I could accommodate this. Actually, I can. So see, this would have been nice, sweet, but this guy, if I can just bring it a little bit lower to accommodate this guy because it's a major turning point. So now I have a more accurate level touching more points. Excuse me, guys. What else? So let's see if we can go for a higher one. Let's see. I think the higher one will be this one, if you ask me. Right, and then when we get to this bridge, maybe we'll cross it. Let me see here. Don't like here. Don't like here. It's too alone. Because let me tell you, for the fact that we turned around twice in this region means that this level is strong. Means that this level, do you understand? Like, we only turned around once here. I mean, it's a strong level, but this for the fact that we did it twice, my nigga, come on. Right? So like this one, 1, 2, 3, 4, another one, 5 here, 6, 7. This is the guy. And there you go. That's exactly how you go about drawing your key levels. And you can see the difference between each of these ones are about 1,000 pips. So between here and here is actually 1,400 pips, because this is 1.36 to 1.500. So this is 1,400 pips difference. 1.25 slightly to 1.36 is 1,100. So you can see that these levels are 1,000 pips in difference. Okay, I don't use the pip count to judge where I should put my level. I plot the level first and then I come and calculate the pip count. And guys, you can clearly see that these are the levels that are going to guide the euro on its way to the upside. I'm pretty certain that the euro is looking for a reversal, because there's no reason why the euro shouldn't continue going higher if I draw this properly, like so. Okay, so we're in for a proper trend reversal on the euro. So first level target will be here. If we rise above here, we're going to come all the way to 1.3713, easy as ABC. Now once I'm able to do this analysis on the monthly time frame, I can then use that direction and then trade accordingly on my daily time frame. So if I just draw this nicely, you can see on the weekly time frame we're experiencing some bounce to the upside very nicely and very neatly. And once again, the euro is in line with AUD USD that we spoke about, in line with AUD USD that we spoke about some moments ago, whereby it's actually on the third touch of the trend line pretty nicely. What actually happened was this was a fail. Now let me use this opportunity to explain something to you guys. As for trend lines is different. You see that for support and resistance, we drew them at the bodies of the candle, but for trend lines, you're supposed to draw them on the wicks of the candle. If I drew it on the body of this candle, this had already looked like a trend reversal. Okay, although we're still kind of like testing the outer part of this trend, this trend line kind of, but the essence is for you to draw. Because for instance, you would have sold here in anticipation of a downward trend. When you draw your trend lines too close to price movement, you tend to get false readings in terms of false breakouts. This is a false breakout. But look, for the fact that I drew mine on the wicks of the candle, I knew that this was a false breakout immediately. And look, we jumped back above it, we have closed above it, and we're pretty much tested, the market somewhere about here, and we're now pretty much pointing all the way to the upside. We have Fibonacci in play, pointing to the upside, and we also have, this goes back to the Willis zone strategy, and we also have support that is also holding. This is minor support, I like to call it. We also have minor support that is holding on, that's holding this market pretty nicely somewhere around here. So this is pretty much the Willis zone setup. It's very simple, easy, and straightforward. I explained this setup on my YouTube channel as at the time I'm recording this video. So this market looks like a no-brainer to the upside. Yeah, pretty much to the upside. So guys, as you can see, if I zoom this out properly, when we break here, we're coming here. If we break here, we're coming here. Anything up to the upside, that's about it. So it's easy as ABC, guys. Easy. This is exactly how I'm able to plot over 1,000 pips into the future. Easy as ABC. Now I'm done with this example, done with the euro. Let's treat some more examples. GBP USD, always start on the monthly time frame. Always start on the monthly time frame, as you know. Come and look for the most obvious turning points, which were these ones here. Look for the top, about here, and as you can see, everything joined nicely. Okay, everything joined what nicely. Everything will join nicely. So it's in the top. I think for GBP/USD, that's pretty much about it. I think when I come on the weekly time frame, I can see some more levels. I think somewhere around here. Now I'm trying to look. GBP/USD is a bit tricky. I'm trying to see. I knew there was something going on here somewhere. Either here, I think here. I'm just going to leave that level there. Okay, I'm going to leave that level there. Now GBP/USD, we've highlighted the levels on monthly time frames. I think on the weekly time frame, I have some other levels that are actually from yes. Some key levels that actually formed here, to be honest. Yes, I'm just gonna. These levels are too thick. Let me delete everything. The first level I drew was too thick. Cool. And now we'll come and look, and then I know for a fact. I think the reason why it's a lot easier for me to draw my levels on GBP/USD is the fact that I was actually trading the market around this period, right? So this level is actually at the top here. This is the level. Yeah, so this is GBP/USD. Oh, the market is going. It's going. Now there was a line somewhere about here that I think it has just cleared. Yes. So simple as ABC, I can tell you that GBP/USD is heading to 1.4200 in a nutshell. Easy as ABCD, easy as ABCD to read. Okay, easy as ABCD to read. So, yeah, GBP/USD is clear. Ladies and gentlemen, we're clear to the upside. We're clear. I'm going to be looking for buy opportunities in this region around here to take this market all the way to the upside. If I want to look for buy opportunities, the best place for me to come is between the 4-hour and the daily time frame. I can see the trend line that is working magic for this pair at the moment. So I will just be monitoring the market for any pullbacks. I will hop on with any, just look for any consolidative moves around here. I'll look for buy opportunities and whoosh to the upside. So that's GBP/USD for you guys in a nutshell. I'm going to do one more analysis. Let's look at US oil. Let's look at something that is weird. Okay, something that is different, like a commodity. Okay, something that is weird. Just by looking at this commodity, I'm sure you guys already know where the first level goes. It goes here. Okay, goes here. Guys, I won't lie to you, this thing comes with a lot of practice. You need to practice how to do this stuff. Practice makes perfect. I didn't become a pro at this overnight, right? Practice what makes perfect. Perfect. I like this one right about here. So I'm just going to extend. These are the key levels for US oil. You can see how these are the key levels for US oil. You can see how it's not taking me that long to put them together. Easy, straightforward. Bang, bang, shenanigans, bang, bang. If indeed there's another level inside here, which I doubt, because these are all steps. So there you go. US oil is already approaching $60 a barrel, which is major resistance. I'm expecting us to see some form of a resistance around this region, somewhere around here. Make sure this is currently drawn. So we're approaching it right about so. Now inside of here, I think I saw a minor level form somewhere about. Actually, this is more sometimes. Oh yeah, I forgot to tell you guys how to draw minor levels. I use my yellows. Oh shit, I forgot to tell you guys. So what I use my yellow levels for is I use it for when I only use them when I'm trading. So for instance, when I've mapped out my key levels like this, but then I zoom in and then I can still see some points that that can actually cause some form of a reversal. I'll give you an example somewhere inside here now. Sometimes I don't. The essence of your key levels, they're not supposed to be drawn anyhow and everywhere. I don't like to draw them everywhere. So sometimes when I see, you know, levels that maybe the key level missed, I can come and use this minor level to plot, you know, so that I know, you know, this is what's happening. So I use this a lot, or I use my line, okay? But I use the line. I could use a line somewhere around here, but I use the yellow bar for when I'm trading especially. So I use it to set like parameters to be like, okay, maybe I want to expect the market to pull into here, you know, for a bigger bounce, you know, stuff. I like to use it to play around, to like highlight, to move around when I'm obviously doing some lower time frame analysis. For instance, if I'm coming to the daily time frame, you know, I want to highlight this level, you know, stuff like that. So there you go, guys. US oil in a nutshell. So guys, I hope I've been able to shed some more light on how to go about plotting your key levels. It's all about looking left, zoom out on the monthly, and look for those points that connect the most. Use your level to try as much as possible to find a common ground, because the more points that are touching that level, the stronger it is. So it's as easy as A, B, C, D. All right, ladies and gentlemen, thank you for staying till the very end of this video. Maybe I might do a part 3, maybe on a couple of currency pairs, but for today, so that I don't get tired and start leaving things out. As you can see, I clearly forgot to tell you guys how to use this smaller one, but I think you guys get the point, right? But yeah, I'll probably make a part 3 of this on more pairs, more complex. So today we spoke on the major pairs. Obviously the major pairs are a lot easier to predict. I suggest you guys stick to them, but in maybe part 3 of this, I might talk about how to use these levels on more complex looking exotic pairs. I'll give you an example, like USD JPY is an absolute mess. So Euro JPY, so I still have my levels on Euro JPY, they're there, but obviously you can tell like this is an absolute mess. Like, where do you even start from? Actually, let's see if we can tackle this guy once and for all. I like this. So I'm going to go for the most obvious ones first. Okay, just going to go for the most obvious ones first. I think voila, that was spot on. Clone. Now this guy is fine, but I needed to touch some more of these levels here. See what I needed to touch some more of these levels a bit more, so I'm gonna lift it off a bit higher. Yeah, I think this is fine actually. Yes. So is there any other level that I might be missing on? So that's pretty much it. This can pass for your key levels, although I'm seeing a little something in between, and if I see something in between that's not worthy of a key level, I'm gonna drop me a nice little line somewhere about here. So there you go, ladies and gentlemen. These are the key levels for what Euro JPY. Oh my goodness, I remember when I used to trade Euro JPY a lot. I think maybe we can actually have another one come at the very top of here. So I'll put this here. As you can see, I didn't put it at the very top here. I wanted it to at least touch this a little bit, so I brought this down just the barest minimum, and we're pretty much good to go. So there you go, ladies and gentlemen. This is Euro JPY's key levels in a nutshell. Nothing too fancy. As you can see, Euro JPY, as long as we sustain, continue making higher highs and higher lows, I strongly believe, and we have cleared this black zone about here, we're going to come here as next level target. We break here, we're going to come here. I know this is the key level for here for a fact, because I was trading the market somewhere around here. So And that's pretty much it. Now you can come to lower time frames, because Euro JPY is bullish, obviously due to the euro being quite bullish as well. You can obviously, this is why I don't like trading these freaking pairs. They look so nasty and messy. Like you can't really anticipate what's going to happen. Not like you can't anticipate, but you just can't, like, it becomes a lot difficult for you to. This is why I tell people, stay away from the minor pairs, trade the majors only. Trade what? The majors only. Trade the majors only. They're a lot easier to predict. These ones are a bit, knocked in the head. They've been knocked in the head, man. So you can see this was a downtrend, lower low, lower high, lower low, lower high. Came out from the double bottom somewhere about here, pointing to the upside. So guys, trend reversal. Once you see a double bottom, the market starts pointing up, starts making higher highs, higher lows. This downtrend is officially over, and we're now in an official uptrend. So for this first level target will be here. Just look left. So I know Euro JPY, actually we're gonna come here. It's a nice opportunity. If I find a buying opportunity somewhere, you see guys, once I just touch the chart, I'm going to see opportunities regardless, but that doesn't mean I'm going to trade everything. I don't really like to trade exotic or minor pairs. I like to stick to the USD based pairs because they're easier for me to analyze. And the truth is, there's no pride in having the best analysis. The market rewards, the reward from trading is making profits. That's all I'm here to do, period. So I'm going to trade the ones that are easier for me to trade, and once I make my money, I'm good. There's no pride in having the best analysis or all of that. Just stick to the majors. All right guys, I'm going to wrap this video up. Thank you for staying to the very end. Hope I was able to impact you guys once again. As always, take it easy and stay blessed.